David Trainer, CEO of New Constructs, here to talk to you about our first report in our quarterly series of the best and worst ETFs and mutual funds by sector. This is a quarterly series that rates the best and worst ETFs and funds for every single sector. Our rating systems for ETFs and mutual funds is unique. We focus on the quality of the holdings and the overall costs and pay no regard to the past price performance of the funds. Plenty of other research funds out there rate funds on their past price performance. We leave that to other people, and we provide you with deconstructed analysis of the holdings and make recommendations based on the quality of the funds. A number one rated sector for ETFs and mutual funds is the consumer staples sector. Figures 1 and 2 in my report will highlight for you, as they do in every one of my sector reports, my top rated and my worst rated ETFs, my top rated and my worst rated mutual funds for that sector. State Street Consumer Staples Select Sector, ticker XLP, is my top-rated consumer staples ETF, and Vanguard World Funds Consumer Staples Index Fund, ticker VCSAX, is my top-rated consumer staples mutual fund. My least favorite ETF and mutual fund, PowerShares S&P Small Cap Consumer Staples Portfolio, PSCC, is my worst-rated consumer staples ETF, and Fidelity Select Portfolios Construction and Housing Portfolio, FSHOX, is my worst-rated consumer staples mutual fund. One of my favorite stocks in the consumer staples sector is Walmart, ticker WMT. The company's grown profits consistently over the past 15 years. In fact, its return on capital and its profit growth has been amongst the most consistent and steady in all the stocks and companies in the world. They're a money-making machine. But the current stock price implies they're never going to grow profits beyond their last fiscal year level. So I like this stock because the valuation implies no future profit growth, and yet the company's got an awesome track record of profit growth. I think it'll grow profits in the future. I think investors can make money in this stock. I don't think investors can make money in Masco, ticker MAS, one of my least favorite stocks held by consumer staples ETFs and mutual funds. This company's profits have actually been declining over the last several years, but the valuation implies the company's going to grow profits at 18% compounded annually for the next 15 years. That's a really expensive valuation. That's a dangerous stock. Mutual funds and ETFs that allocate significantly to stocks like that are going to get a bad rating in my system. We're here to help investors avoid blowups in individual stocks, ETFs, and mutual funds. And you avoid blowups by not owning stocks with bad earnings quality and expensive valuations. Again, this is my first in a series of reports on the best and worst ETFs and mutual funds. Look for upcoming videos on every single one of those reports in the next few days. Thank you.